The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The webinar will begin shortly. Please remain on the line. The broadcast is now starting. All attendees are in listen-only mode.
All right. Good afternoon, traders. Sorry for the delay. A little bit of a platform snafu. Had to log out and log back in. I needed to attend to that. But anyways, hello and hello. Happy New Year to you, Phil. Happy New Year to anyone else I haven't seen. It's good to see everybody. I hope 2023 is going well for you. Hopefully it's going better than it is for the market so far. Doesn't the market know it's a new year? Didn't it set some resolutions? Get more bullish. I don't know, something like that. Tom, happy new year to you. Good to see you. Hello to you, Bob. Hello, LK. Hello, everybody else. Welcome to the Tradespoon Live Trading Room, Stocks and Options. Closing bell. My name is Scott. I'm the head trading coach here at Tradespoon. I will be your host. I believe we're simulcasting. It's very technical media term. Simulcasting on YouTube. If you're on YouTube, hello. Good to see you. I don't have access to the YouTube chat, so I apologize. But just know I'm thinking about you. I care about you, and I'm glad you're here. Let's dive in. Trading for going on 23 years, teaching going on 24 and 20, I believe, is where I am in 2023. Very exciting. Very exciting milestones, personally. Here's the disclosures. Be careful out there. Still risky this year. If you were wondering if we were going to change the disclosures for 2023 because maybe the risk level has dropped, it hasn't. Still the same level of risk. Still more substantial, potentially trading options. If you don't know what you're doing, have a plan, manage your risk, stay engaged. Let's dive in. Let's talk about it. Let's talk about what we see. So yesterday started pretty good, and then it ended up not so good. Then today it started flat, and it got good, and then it gave it back for the most part. That's where we find ourselves. S&P is up 0.42. The Dow 0.04. The NASDAQ 2/3. The Russell 0.5. Oil is getting smashed a bit today, down 5%. My goodness. Gold is kind of flat. Silver down 1.25. That's what we have. Fed minutes today said, yeah, regardless of what the talking heads may say that, oh, they're going to have to lower rates in 2023. It's not going to happen, basically. I mean, this is pretty strong language that says there will not be rate cuts in 2023. Inflation risk remains in focus. Maybe they continue to ease. Who knows? Maybe it's a 0.5 point again. I believe we looked and it's February. I believe it's early February, first week maybe of February. We have a Fed meeting, FOMC meeting, followed by policy announcement. Maybe it'll be a 0.5 point. And then they drop to 1.25. Maybe they drop to 1.25 and try to taper off to let it coast and watch the data for a little while. That's probably one of the biggest. Everyone's like, what's moving the market? What's moving the market? Well, as of right now, it's still inflation, still the Fed. That's still the primary matter impacting the market as of now. Of course, the question remains, will there be a double dip recession? I'm of the opinion that we already had one. We had we had 2 negative quarters. I've decided to break. I've seceded myself from the board of recessionary declarations. I will allow my technical definition to reign. We technically had 2 negative quarters. That's a recession as I see it. The market was down. I believe the S&P hit 27% at its worst. I looked at the SPY from open on January 3rd, first day of 2022, to close of December 30, last day of 2022, 19.7% from open to close. That was the year. So if you're starting to assess, how did I do? And if you look at last year and you're like, man, I was down 5%. You outperformed the market by 15. That's not bad. Don't look at the market. Look what it gave. The biggest assessments you should have is if the market did well and you didn't. That's the problem. If the market does poor and you did poor, you matched it. If the market does poor and you did okay, you beat it. Right? So as you assess 2022 and you look at the lessons learned and the rules that you're looking to adjust and the focus you're looking to have for 2023, make sure you acknowledge what the context was. So there you go. Now, what are investors weighing in on? Fed minutes, econ data. We'll talk about that. So the Fed minutes is a big one, obviously. We're getting some jobs reports. December JOLTS report reasonably strong. So what we're seeing, Manhattan home prices drop in first decline since the pandemic. The labor market staying pretty good. That's always a good thing. What else do we know? That's really Tesla's Cinderella ride is over and demand is starting to crack. Here's what could come next. It's Tesla's definitely been getting smashed for quite a while. And that's about it. Okay, let's look at the economic data as it stands. Not much was released yet. Monday, inflation expectations. You can see the 1 year's down to 5.2. Remember, we got up above 8. So seeing it, expected. I don't see did I not get the actual data here? What's going on? Gonna be a tricky contest today. Indeed, sir. Indeed, sir. Okay, never mind. We'll just keep working our way. I'm not sure why I'm not getting the data here. Next week's. Oh, sorry, that's why. Sorry. I was 1 week ahead. I was like, wait, no work, no report Monday. Tuesday, manufacturing came in as in line. Construction spending was in line. Job openings were actually in line with previous and ahead of expectations. Where everyone keeps thinking, oh, this labor market, you hear a few anecdotal things about the labor market where it's like, oh, there's layoffs. Well, yeah, certain businesses are struggling and they should clean it up. I actually heard a term I've never heard before. Anyone heard this before where they talked about labor hoarding, where some businesses right now are going to actually hold on to people in positions where they may not necessarily need them just to not have to rehire 2 years later and pay more and have a weaker labor pool. So that's interesting. So the labor market continues to hold the, I mean, it's Atlas for this market. Everything's on its shoulders right now as the Fed continues to try to get inflation down. We are getting closer to, sorry, I had to reset. So let me get my charts back to what we're used to here. That's fine. I'll leave that there. We're getting closer to earnings season. We're not far away. These days, I used to go to Alcoa, but these days the financials tend to go a little earlier. So we've got 113. Who else goes early? Wells Fargo. 113. So we've got a little over a week before we kick into gear. There's Alcoa 118. We got the financials for the first 3 or 4 days. And then around the 18th, it's going to kick into gear. So 1 week till it gets going, the second week till it really ramps up. And then we're going to get corporate data, right? Then we'll have corporate data. And then the corporate data, we're going to see, and everyone keeps thinking, oh, the supply chain, it's going to do this, it's going to do that. Maybe. And maybe not. So I guess we'll see. All right. What else? We have not done the quiz yet. No. What else do we know? So FOMC minutes came out. We know what the Fed said. There will not be any rate drops. There's likely still to be rate hikes. Tomorrow, due to the fact that Monday was no market, ADP is releasing a day late. So tomorrow we'll get the ADP report expected at 150. Last time was 127, and we got last time we got 127. The non-farm payrolls last time was expected to be low as well, and we got 260. I think we were supposed to get about 140, 150, and we ended up getting 260. This time we're expecting 200. Even at 200, it's still an expanding labor market, right? I believe the number is like 100 to 150. If we're getting 100 to 150 new jobs, that approximately maintains. Maybe it's more like 150 to 170. But we haven't hit anything that would even indicate, any shrinkage at all, any weakness at all. It's only been a decrease, but it's still very strong. So we have jobless claims tomorrow coming in, 220 again. Anything between 200 and 250, we are absolutely okay with, right? What else do we have this week? Then we have non-farm. We talked about that coming in at 200, unemployment at 3.7. Remember, the Fed thought 5 to 5.5 is where that could end up and be within acceptable parameters from their perspective in trying to deal with and curb inflation. So that's 1.3 to 1.8% of a 170 million person labor pool. That's a lot. 2.5 million jobs, approximately, that we could lose and still be in the range the Fed has said. But we haven't seen that happen. I think that's a big piece of where they're talking about a soft landing. Jobs are certainly can be manipulated. Labor participation rate can make sense to look at. I agree. What was that released at? I see that it was expected at 82.5. Services came back as expected. Or no, that's coming out. Sorry, that's coming out Friday. We'll see that one Friday. We'll see that Friday. Okay. Let's go to the toolbox real fast and look at the model's projections. A grind. It's projecting a grind. So for a while, it was projecting bear flag, thinking it might come down. And then it thought maybe bear flag and it might come down. They're thinking bear flag. But now the fact that it hasn't come down, you can see the model's like, okay, the sellers had their chance. And they haven't done it. Right? But now you can see we're looking at this support level holding potentially and possibly forming this basing range. Now, to be honest with you, this here, this is pretty normal. When examining the cyclical pattern of the market around January, this sideways is very, very par for the course. Bob said that Vlad has done some condors, right? And condors are, right? Condors, butterflies are very similar. But a butterfly, for me, allows me to put one side on and then potentially wait to see if I need to put another side on. But they're very much the same trade. What is a butterfly and a condor? It is delta neutral. It is vega negative. It is theta positive. What does that mean? Vega, let's start with delta neutral. Delta neutral means you don't really think it's going up or down, but you're expecting it to stay the same. So you might set it up so that if it stays below this number and above this number, there's your range, give or take, right? Or you know, in the wider the range, the smaller the profit. If it stays in the range, your delta is neutral. It doesn't do much of anything. Vega negative, meaning what? Meaning if implied volatility drops, you make money. And theta positive, which means as time ticks, you make money. So it's more of a time and volatility trade than it is a directional trade. Yeah, I mean, we could see this thing grind sideways for a month. We could see it for even longer still. But the model is definitely projecting sideways. Sideways is what we've seen for the past 3 weeks when we failed to get the last leg of our Santa rally. Sideways on the QQQ. Let's go to the IWM. And sideways to slightly up a little bit, but mostly sideways. Did I already do IWM? Did I do DIA? Sorry, I lost track. They're all basically showing the same thing, right? And that is the sideways grind. Where's that coming from? You can see we're no longer here on this side. What we're doing now is coming back over here, right? Over here where we say to ourselves, what do we expect? And you can see this, whoops, goodness, hold on. I mean, we did get some Santa, right? We did get some Santa rally in here. We missed this last piece. It just sort of fell, and then it's like, yeah. And now what do we think? Now as we come over to January, you know, that tends to be the bottom, but it really is like second week in February where we see things move, a little sideways move, a little sideways move. February through March or through May, then we hit sell in May, go away. If you ever wonder where that comes from, That will give you an idea. But basically what Vlad says is he's expecting it to stay somewhat range bound in January. And then maybe we start to kick into gear February. Absolutely. Absolutely. Okay. Here's today's heat map. Energy, I would have thought actually looked worse with what oil is doing, but it's holding up. A couple oil stocks are getting beat up. Healthcare plans getting beat up. But pharmaceuticals, devices, it all still seems to be, pretty okay. Financials looks good. Technology, the chips look good. Software, Microsoft looks terrible. Can I show the difference between a condor and an iron condor? Are both two spreads. Here's the difference. A condor is a bull call and a bear call. All calls. Or a bull put and a bear put. All puts. And it's one bullish and one bearish. So you want it to stay above the bullish and below the bearish. An iron condor is basically using all credit spreads. I'm a little behind, John, but I've been slightly negative here recently. But yeah, same exact idea, Bob. Exactly the same idea. So I'm going to I'll make sure I get my market posture number updated. And I'll give it to you guys Friday. If anyone does do market posture, give me your numbers. I'm curious what everybody has. So yeah, it's very interesting. Financials looks good. Semiconductors looks good. Cyclical looks good, except for Amazon. Tesla leading the way. I don't know. Defensive, not as good. Communication services, Google struggling. Everybody else is having a hell of a day. So it's just a weird mixed bag today. We'll get to some sector rotation. We'll get to some sector rotation later today. We'll have some time. Let's hurry and get a quiz. Let's get a quiz. Let's look at the VIX. We'll look at the watch list. I mean, you can see what the market looks like. We're just right smack in the middle of this range. Since December 16th now. And if you don't count this one shadow, we're between 377 and 86. So we're in a 9-point range up and down with nothing really happening here. So yeah, it's grinding. It is absolutely grinding. And you can see even today, we're right in the middle of the day. We've been as high as 386, low as 381.5. Here's where we are now. Where's the quiz going to be today? I'm going to give it a $1 range, and I'm going to go 384 by 383. This is the range. Boom. A. Boom. C. B. A above 384. B below 383 and 384. C below 383. John is a B. Jacques is a B. I'm going C today. I think it's going to sell off. I think we're going to be closer to 382. Phil is joining me there. Tom is joining me there. LK is joining the other guys as a B. Anybody else want to get in? We have pretty good numbers today. But no, is no one interested in gold medals? Do we need something new this year to award for a prize? Trophies? Gold cups? I don't know. Bob is an A. They used to be so valuable. I feel like the gold medals are like Bitcoin. They used to be so valuable, and now they just have lost a little shine. I don't know. Walmart at strong support, should add to the watch list. Well, we like the consumer staples. I believe they have that characterized as a staple. Anybody else want to get in? All right. 383 by 384. That's the range today. Good stuff. Let's back this out and let's take a look at the VIX. Oh, I don't know. Still holding on to some hedges, but I got to tell you, I've got hedges that got started over here. No, those are doing fine over here. These are not doing as well. I still have some of this. I think I've closed half of this one, but this one here is just kind of getting beat up a little bit. Time decay is hurting it. RTX I closed personally. I think I took a small loss. Anyone make a little money? I'm sure someone closed probably and made a little bit. It was profitable for a few minutes. But yeah. Okay, so there you go. Let's look at the VIX. So here we had profits today. Koo said, there you go. Still in? Bob said still in too. Now I got to go see. I'll come back. Oh, took some profits today, I hope you say, Koo? Yeah, what day was it? I can't remember now. I think in here, I might have just closed and lost patience. But yeah, it looks like it would be up a little bit. The problem is the time factor, right? The time factor. It's running low on time. So if you are still in it, make sure you have an increasingly hands-on management plan for that. It's going to be important. Okay, good. Yeah, I hope you can squeeze a little money out of that thing, I hope you can. Let's go back to the VIX. I'm watching a new show on I believe it's on Hulu actually. Tell me if you've seen this one. It's called Mr. In Between. It's an Australian show. It's excellent. It's only 3 seasons. It's it's a very interesting story, plot. Anyway, if you're looking for something to watch in 2023, you don't mind a little violence, Mr. In Between. Okay. I never actually saw the show Breaking Bad, but a lot of people say it's very similar, and it's supposed to be a good one too. What does the VIX tell us? It's still rising. I mean, we came down from here, but that's not a lower high. That's we had a lower high through here, and then we busted above that. It's you can see the VIX is struggling to find its consistency, but overall, right now, if I had to, and why am I still holding 1.5 hedges? Because this seems to be where we're going right now. I would love to see us, take one more day down, maybe pop up a little. Now, if I got that lower high, that would close most, if not all, of my remaining hedges. If I saw that to me is what we need to see on the VIX to break out of the current basing pattern that we're in. We just haven't seen any consistent signals like that just yet. So that's definitely something that I am on the lookout for. If, however, let me erase this and then go forward. If we come down like this and then turn low, 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 1, higher 2, higher 3, I would keep my 1.5 and raise it 1. thinking we're possibly going to get back there or possibly even get to the upper 20s on the next move up. And then if it's going to realize the doom and gloomers fears, and I'm not saying it wouldn't, I'm just saying that's not necessarily what I'm looking for as of now. But if it were going to happen, I think that's what it would look like. And I would want to make sure that I keep and add to any hedge / speculative bearish situations that I have. So there you go. Okay, let's go through the watch list. Let me know if you have any questions, comments. If I'm missing something, I'll take a look at Walmart. Oh, you know what? Real quickly, before we do the watch list, let's do a sector rotation. Shan't we? We shall. We shall. 200 days, 9 months. Energy's at the top of this, followed by a patch of defensiveness, utilities, staples, healthcare. Next, we have industrials, then materials. So building seems to be okay. Then bringing up, we have financials that tried. There's the market. There's technology. There's discretionary and communication services. So you can see why we've been reluctant about that. Let's go 133 to see if there's a shift brewing. This is where we saw financials show their best amount of strength, but still wasn't that much. Here's energy. Here's industrials. And then you have the same defensive patch, healthcare, utilities, staples, materials. There's the market. Where's our growth sectors? Technology, discretionary, communication services. All but financials from our primary growth sectors are down. Okay. Let's drop to 66. The last 3 months, you can see energy's kind of losing its luster, but industrials and materials staying where they are. We've been watching and trading in Caterpillar, Deere, and Boeing out of there. There is financials. Financials is actually trying to, we'll see what it looks like on the 22-day, but from here it looks like it's trying to turn around, whereas the others just not really yet. Technology still down, communication services still down, consumer discretionary really bringing up the rear. And let's just see if there's any shift in the short-term momentum worth noting. Very defensive over the last month. You can see utilities have led us by being the least worst. Here you can see staples and healthcare kind of in that place. Industrials, you can see energy has dropped off. You can see financials is still kind of trying. That's where you can see it's like, wait a second. You can also see, though, communication services is all of a sudden, maybe there's some institutional money coming into these two. Technology, though, and discretionary are still kind of weak. So of the weak sectors trying to show recovery, it really feels like the strongest one making the recovery is communication services. So we are absolutely going to keep our eye on that. Okay. Bob said home builders are doing well. I think I have that on the list. Let's just take a look real fast at a couple. Here's XHB. Home builders definitely showing some strength. Here's Walmart. Walmart seems to be trying to hold support, still lower lows, lower highs, but it's an easier line of consolidation. I feel like at this point it's turning like this. So I still want to see some kind of a higher low. But I agree that it's stabilizing for sure. Alcoa, I would say that if Alcoa pulls back and it doesn't drop, there might actually be time to sneak a trade in over here before earnings. If it can hold and turn, knowing that materials is holding up pretty well. Apple, nothing there for us. It's just loitering at 6-month lows, possibly even yearly lows. ADI, there's chips. So you can see, we see chips being up, but it's got work to do. We can't be like, oh, look at the green day by semiconductors. Now we're interested in paying more attention. I don't know that I'm necessarily interested in trading it yet. This still doesn't have anything super fantastic about it. I still need it to same thing. Could I potentially think of this as a breakout? There's really no volume. The only volume we had was yesterday, and yesterday was a selling day. I need this thing to get maybe even a little higher, pull back, higher low. Okay, now I have something worth considering as an actual opportunity, right? Ooh, Archer Daniels. I don't know what's going on there. It looked like it was trying to pick back up. We talked about that being a signal, but it didn't last long before it, would have given a good chunk back. Still probably made some money on that last trade. But at this point, as you're waiting, you're thinking, all right, I'll take the next sign potentially. And right there, it looked like it wanted to maybe stabilize and try to turn. And then it just didn't. So great, you're done with it. There's no way I'm touching this. Look at the volume profile. Volume accelerating into the sell-off. I mean, we clearly have broken, that last core level. The next core level of support, it's probably down there around 83. Yeah, I'm not touching anything in it. AMD. So this is the maybe for semiconductors. If I find one that can get far enough away, maybe it gets through here, but I need it to show enough followed by this. I need the higher low. I needed something that says, look, you can see here, it just kept going down, kept going down, kept going down. Then it went sideways, sideways, sideways. I mean, it really, maybe right there was the first higher low, and it went up a little bit, turned, and then it gave us this, and then just nothing again. There's not a lot in it. Be aware. Be aware. Amazon, not doing much, just coming off new lower lows. I'm not super interested at this point, quite honestly. AXP, okay. That I could actually sink my teeth into. Not now. Not now that it's overbought and running out of steam. Now that it held, broke through this line for a higher high. Now what? Now I just need a small pullback, and if it holds at 145, that's what I want right there. That's the trade I would take. Right? Same kind of thing right here. And then it went up, and then it pulled back, and then it turned. There's a trade. Boom. And then it gave another trade there. Boom. And then it gave another trade there. Whoops, I missed that one. Boom. That one was a little harder, but still probably made some money. But those are the three that came after it got through all of this nonsense and showed actual stability. So it's like, okay, if we have this nonsense, what do we need to see to be convinced? That. I need the higher low. Higher low, let's go. Boeing, anybody take it? That was the signal that we were talking about on Friday. It pulled back. You can see we had the pinch. We had the close. Let me know if anyone took that one. That's from our list. And I believe we discussed that as one of our core opportunities for Friday, on Friday morning. And now it's looking pretty good if you did. So we'll continue to discuss this one. Anybody take the Boeing? That's what I'm looking for, right? Is I'm looking for higher highs, higher lows, looking for things that are holding up, that are in the right sectors, that are doing the right things at the right time. Do we have less of those, fewer and further between? Yeah, unfortunately, that's true. Baba, I absolutely did not identify. I think I even said I'm on the fence with China. China stocks, you can see they got into the grind again, and I'm like, yeah, we were watching them. Theoretically, you could have looked at this right here as a trade signal, and then it went grinding. 1, 2, 3, 5, 6 days. That was just that's not something I would have been all that interested in. It gave a signal though, but I said I'm just not liking the way China's behaving. So I did not take that one. Did take Boeing, didn't take this one. Caterpillar still setting up theoretically. This is the same type of a setup. I mean, it might grind a little lower. It could come down here to 235. But this 235 is much higher than this 228. So if we get it down here, you can see if we get a nice little pinch and turn, this thing doesn't drop. The sellers have plenty of opportunity, but this thing just touched higher highs. So Caterpillar, I would actually be willing to trade in addition to Boeing. ConocoPhillips. This one is, if this holds up, doji tomorrow, and then a bullish signal on Friday, that's a buy for me, and I'll probably take it on ConocoPhillips. It broke the consolidation. We can see that clearly. This was our consolidation coming down. I mean, obviously it was maybe more like that, but whatever. We busted up, got to here, higher than the previous. If we come down and we don't get all the way back down here, so if we get to 110 and then we turn, same thing, that's a go. That would be a go for me. Costco, no, Costco still has work. I'm not looking to buy these that are a bit dumpster divey off the bottom. I'm not trying to buy off the bottom. I want it to break out of the basing range, pop, and then retest above the basing range one way or the other. I don't care which way. It can go bullishly or it can go bearishly from here. But I definitely want it to break the base and then test and hold the base. And then we have a much clearer path in front of us. DBC does not look great. I think it's natural gas. We'll get to it, but oil looks okay. Natural gas, not so much. John Deere also kind of turned a little here, but it didn't really give us the price confirmation. So I would say I'm inclined on Caterpillar, less so on John Deere. The diamonds are grinding sideways. Disney has had a breakout for me. So Disney has broken its consolidation, popped up out of it, got a higher high. We clearly got above the old high there. Now what? I mean, it could go a little higher, and I'd be like, okay, still watching. And then it turns around and it comes back here towards like 87, and then it turns back up. That's the trade I'm looking for. Very similar to this. I'm pretty sure that's what happened. And then it gave you another one here. And then even potentially, depending on how you do earnings, another one potentially here. So these big chunks always come after stabilization. That's what we're waiting for. It's given me the first sign, but it hasn't given me much follow-up since that. FCX grinding sideways. But it's holding on. Same thing. You could justify a trade on that. FDX. Looks okay, I guess. There's another China stock, FXI, very strong. GLD. Had a big breakout. John, you mentioned that. Big breakout here to the upside. I watch, but don't necessarily trade it. Goldman, nothing yet. The financials are trying. What do they need to do? They need to prove it to us. Establish a base, get a new high, get a higher low, then maybe. Fred said, I like big chunks after stabilization. Who doesn't? Give us some stability followed by some big chunks, and we'll be happy traders. Absolutely. Gold, GSK, GlaxoSmithKline. Look at the grind. It's in a base. This is a basing pattern. If you've ever heard of, they say it's in a base. It's in a basing pattern. What does it mean? It means that it's declared this home base. If you think back to your neighborhood wars, this has been declared home base. What does it got to do? It's got to break. If it breaks down and then it retests, then I think it's going to sell off to 28. If it breaks up and retests, then I think it's going to make a move towards 42. That's what I'm thinking. Not necessarily in one fell swoop. Could take multiples, right? It could be a up, or a down, up, down. But that's the thought. For what I think it's going to do right now, nothing yet. I don't think it's going to do anything yet. IBM just kind of grinding it out. Same with IWM. Oh, look at Jets. Look at Jets. Everyone's deciding that it's not as bad as Southwest has made it seem, I guess. I don't know. There's the consolidation line. We've broken that. Here's an old support / resistance transitory level around 18. We're very close to that. Easily see it get there and then come back off of that. And then for me, anywhere, between 1675 and 1750, anywhere in this zone that this thing stabilizes and turns. Dun, 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 dun. That's the signal I'm looking for. Being patient, waiting for my pitch. Not swinging high, not swinging in the dirt. Wait for your pitch. Eli Lilly looks okay. MasterCard. I would say MasterCard and AXP are the two I like the best. I haven't seen Visa yet. I mean, it looks like it's tried to stabilize at this support level. It's gotta give me something above that. If it pulls back from here, it's definitely looking overbought. If you look down at your stochastics. But if it pulls back and only drops down to 340, 342, 345-ish, somewhere in that range, and then it turns, yeah, I think we're good with that. I think that's good to go. Meta, I think, has broken its basing pattern. If it can now, so the basing pattern is not enough for me. You can see this thing. Yeah, I guess it technically had a base here. It broke, came back, and then it just sort of based again, right? It's having a hard time getting momentum out of its breaks. But if it comes back down and it holds, I would even say 118, but 120. If I get a higher low coming out of that base, I'm ready to go. I'll trade it. Curious if any of these are starting to get picked up, trying to rally into the close. Oh, okay. Not yet here. But you can see it's kind of looking for what we're looking for. Does it get the higher high? Does it pull back? Does it get the higher low? Even though the range trend doesn't look good, this looks great. This is exactly what I said I'm looking for. It breaks out, comes back, higher low. There's my old low. Whoop, higher low. This is a go signal right in here. And we're hoping it gets to a new higher high. There it is. It's not that complex of a signal. It's just, are we showing the fortitude and patience to wait for exactly what we're looking for to come into play? I think I got to speed up a little bit. Sorry. The time got away from me today. Merck looks pretty strong, and it's trying to turn. I just don't like buying on a negative doji. Marvell still kind of beat up. Microsoft looks terrible. It's a dog. Netflix. That was questionable. I think that's coming off that a lower low. I wouldn't have taken that trade. There is plenty of time for it to give a small pullback and then rally into the earnings. Where am I? Nvidia, nothing there yet. So for me, the chips one day does not put it into place yet. Well, Oracle's next. Ooh, Oracle looks pretty strong. Look at that. I would consider it. QQQ, nothing there yet. Starbucks looking pretty strong. Technically back in here, tried to give a signal. It would have been a tough trade. I didn't take it. Anybody take that Starbucks trade? Let me know. Silver, no. Semiconductors, not yet. There's SPY. We said between 383 and 38. No, what do we say? 383 to 384, I believe. Here's Toll Brothers for the home builders. Here's Tesla. Everyone's like, oh, Tesla's trying to rally. Is it? We said it would get to 100 before it got to 100 before it got to 200 back when it was around 150, and that happened. That's not much of a rally when you look at what it's doing. And in fact, that's still right in line with its consolidation. Just coming down. That's got to break that. Then hold it. Then I'm okay. Anything less than that, no expectations. UNG, same thing. Look at it. That's what's killing. DBC. Doesn't look great. Visa is again like MasterCard on AXP, looking a little better. VIX still coming down. Financials, there it is. You can see the financials are showing a little bit of strength. Let's keep an eye on that and what we would want to trade if it continues. Industrials are a little flatter, as are staples. We're looking for the institutional shift. Financial seems to have a little bit of money coming back in. I think that it's still fool's gold when it comes to technology. Industrial still is holding up. Materials still holding up. That's what I'm looking for. Rallying into the close. Let's go look at the SPY. Market is closing here in about 10 seconds. So we're going to get the live feed right on time. Boy, it sure is. It sure is. Oh, and it looks like the bees are going to have it. So it cratered down, got all the way to 31. The buyers pushed it back up. The bees have it, 383.74. That's our close. Yeah. Okay. Well, we're in a basing range. So what do we need to do? Be careful taking too much in any given direction before we have full confirmation about what direction it's going to go. Other than that, I'll see you guys Friday. I'll be here Friday morning. We'll go through the watch list. We'll see if anything's setting up. We'll see what we want to do. But in the meantime, what is Vlad doing? Neutral. He likes iron condors. I like butterflies. In fact, you know what? Maybe what we'll look to do is add a butterfly on Friday into the weekend. Get some time decay working for us. Somebody remind me. Let's look to show the other side of what those time spreads can look like, so you get a little taste of both. It's good to see you all. I hope 2023 is going well. Staying healthy, staying happy, trading well. As always, happy trading.